What's up, guys? I hope you are well, and welcome to another lesson. Today, we are going to discuss directional bias, and this is an exciting one because this really does kind of, what's the word? It kind of marks the start of the rest of the course in terms of, really taking it to the next level now. We've spent, the previous module going over the basic elements, basic areas, liquidity, imbalance, fib levels, mitigation, and your introduction to market structure and things like that. But now, as we obviously come into, the fourth lesson in module 4, we're going to really start putting everything together now. And it's all about how we determine the market conditions in order for us to find ourselves opportunities to trade within. So, this really is a very handy lesson to pay attention to. And this is going to hopefully leave you having a much better understanding of market structure and directional bias. So, as we carry on from this lesson, we're going to talk very shortly after about buying opportunities, selling opportunities, and how to really identify them in certain areas, as well as talking about news, your specific entry models, risk management, trade management. And then we're going to go into very high probability buys and sells, and then with overall just a deeper understanding of market structure. And, don't worry, before, I carry on, I just want to say don't worry, because this isn't going to sort of start being highly overcomplicated or anything like that. The whole point of this course was to keep things super simple, and you're not going to see indicators and charts or EMA signal areas or anything like that. It is simple price action. And the reason this course is of some length is because there's a lot to understand, but what is there to understand is valuable, and it can still be approached in a very simplistic way. So I really meant what I said at the start of the course about this being a very simplistic way of trading. And, we are looking for accumulation and distribution and reaccumulation and redistribution. And all we use directional bias for is to determine the overall direction of where we want our trades to go. So it's really quite important to grasp the understanding of this and just where we base ourselves around market structure. Now, as you'll see, on the NASDAQ, I've got the daily time frame open. Now, the reason I've got the daily time frame open and not the 1 hour time frame or the 15-minute time frame or the 5-minute time frame is because the higher time frames trump the smaller time frames. Overall structure is based on your higher time frames. We can use shorter, smaller time frames for entry models and things like that, but that is no good as a sole purpose to trading. You have to understand the bigger picture of what the market is telling you and the conditions it represents itself with. If you refer to previous lessons when I've gone over a market structure, I've spoken about it being almost like a broccoli, where you've got one big area, which is your market, the big broccoli itself. And each tree that comes off a broccoli, falls off a broccoli, is the same, but it represents the bigger picture. And that essentially is the same thing as what we're looking at here. So the market overall has a representation, and because price is extremely fractal, it happens along the time frames. And that's kind of what we're trying to get an understanding of today. So when I say directional bias, I kind of want you to be starting on the higher time frames. And if you're not someone that looks on the higher time frames, I would like you to make it your utmost responsibility to start looking at the higher time frames. Now, this isn't going to be necessarily areas you're going to enter into for trading purposes if you're not a swing trader. And, I wouldn't worry about your trade entries on the higher time frames as such, but what I would use them for is areas you can see that are of interest, where you want things to happen in certain areas, and areas that you can actually see as targets as well. So, if I look at the overall structure here, I can see prices obviously pushing higher. Now, if I expand it all the way back, actually what I can see is, price has actually been moving lower in, the last however amount of time since 2022. So, whether or not you want to call this bullish or bearish, this is why you have to really understand, the overall bias of the market. Because when you look at what price has been doing for the last 2 years, it's actually been walking its way down. And it's actually been a long time, December 21, since we were up at this high here. And I believe that there was, an all-time high, which was obviously created November 21. And, we're quite a long way off that now. So in terms of where we see in price to potentially go, at the moment, you would probably place your bets that we're probably not going to exceed this high here, just by looking at what's happened in the last 2 years. Now, if price was to suddenly close above this high here, well, you would anticipate that's a severe change in market direction and things like that. Now, this is your high and this is your low, because whatever's going on in here never created a new low necessarily below this point here. So this is kind of a range in market area. Now, this isn't something you have to worry about in terms of actually getting into the opportunities, but these are areas you can pinpoint and access for the future. If we go onto a higher time frame, onto a weekly time frame, you can actually see what we kind of measured out on the daily in a bit more of a better picture. In fact, if I come back and keep the lines back and I actually show you it from the green lines here, this here is your daily area, which is represented now by the weekly candles moving its way lower. So it's really quite interesting. And looking at the weekly area here, this is the high, this is the low, which exceeded this low here. We never made a new low, so whatever's going on here is kind of to be treated at this point here as a retracement. So in terms of looking at where this could end up, actually, when we come up to maybe this candle here, after sweeping out this internal liquidity, which it looks like we are just on the cusp of doing now, maybe price can actually drop lower. Okay, maybe price can actually drop lower. But essentially, this is all to be done to analyze where you are overall within structure. And, if we bring back our line charts here, and we kind of even go up even higher, you can now see where you are on the monthly time frame. And, the monthly timeline gives you a much more of a different picture, which is actually that price is moving higher. So as you can see, we made these all-time lows back down here. So a long time ago, 2003, creating these equal lows between 2003 to 2008. And then price obviously started coming into making those all-time highs. So, one thing you have to kind of look at here is the situation is what you see it is price ever going to come this low again? And consider the, economic times of when it was, 2008. And it was the whole, world financial crash and things like that. That's when everything was at its lowest. And obviously from that point in, you can see obviously price moving higher. Now, it's very, very unlikely that we are ever going to come this low again. Typically, we can see overall we are a bullish area here. But in the last few months or the last year or so, we've been dropping even lower. Now, this is obviously due to a variety of things. We don't need to understand the nitty-gritty of it. But what we do need to understand is where we are and what we're doing within the markets. So, really, really interesting stuff that's kind of happening here. And, this is kind of a lesson to give you an example of what you should be doing when you're looking from the monthly all the way down into certain areas, and to actually pinpoint in certain areas of actually how to take your trades and where to take your trades and things like that. So what you need to get used to doing all the time is, firstly, identify where price is right now. So this dotted line on your trading view chart should indicate exactly where you are. So we can see where we're kind of traveling at the moment. Now that will be refined the more and more you go down onto the time frames. If you're on like a 1 minute time frame, that would be a lot more refined. But essentially, don't worry about necessarily this candle here, because you can see price has broken structure to the downside based on this line chart. So you can see this low, you can see this high, and now you can see this new low. And now you can see that price has made a high, a lower high, a lower low, a lower high, a lower low. And we've made a lower high and just about made a lower low, and then we've broken structure to the upside. But what I don't want you to do is get into the habit of looking solely just inside here. I want you to get into the habit of looking left all the time. just literally shove your eyes closer to the left and identify what is here, what could have potentially caused this break to the upside. So as we can see, we've got ourselves a very short-term low here and a new high. So we have technically broken structure to the upside. Now, why have we done that? There are a couple of things you can kind of look at. Well, price closed below that low and then started accumulating. So maybe this is a liquidity grab. If you turn the candles back on, what you can kind of look to identify is, in here we've got imbalance to fill. So there's a lot of potential for price to move higher after reacting inside this imbalance. So, the first thing you can do is identify where you are within structure. So we've got this area of imbalance here. Now, again, we can look to the left even further now. We can actually go even lower on the time frame and kind of see what happens. So we can see that price is obviously coming up, making a low, pressing higher. We made a low here, respecting this candle. And in the meantime, in the process, we actually closed below all of this liquidity and we pushed price higher to make this new high. This area here really does protect price from going any lower. And in theory, going by structure, we've got no reason to come any lower than this area here, potentially ever. I'm not saying it will never happen. It's likely it will happen one day. And obviously we are making our way lower. But what I can see here is that, we've pushed in and made a high. We created this imbalance. A little bit of a fill, but essentially we made a new low and then we made a high again. And now we've been coming down, attacking these areas of liquidity, a bit like what's going on here. And we're now looking to accumulate to go higher. And we've done that within filling the rest of this imbalance here. So this is definitely a legitimate area price can come to. If you kind of highlight where we are and things like that on the monthly, it's actually showing us a reaction to the upside. And it's all because we looked left. We can identify these areas. Okay, you can identify these areas. So even looking at here, price made a high and then made a low. It actually respected this candle right here. So you can actually see price did not close lower than that candle there. Okay, look closely and you can see that body closure respected this candle. But now what I can also see is that price came into this FU candle. So price dipped into the FU candle, reacted to the upside, and respected this candle here. That there is very, very bullish. And in the meantime, in doing so, we took out this liquidity here. So what's happening now on the higher time frames is we're taking liquidity here, and now we're potentially accumulating to come higher. But this isn't where we're looking to get into our trade setups and things like that. And we have always got to go with structure, but you can essentially, as long as you understand it's here, you don't need this on your chart. But we identify that we have reacted with an imbalance. Now, as we come lower, we can actually look at the weekly time frame, and what can we see? We've got a low, we've got a high, we've got a lower low. We've got a lower high, but no lower low. So this is the last high that broke. The last low that was broken was this one here. We have got this area here. However, now looking at what internal and external liquidity is, we stole this liquidity here, which is external liquidity. And essentially, where is it? This area here within the trading range, 50% and higher, that there is potentially, it's creating equal highs anyway, but I would, consider that to be internal liquidity. So there's every chance, we're coming to pierce through this area here. But overall, we are, we're still bearish on a weekly, because let me just draw it out for you. When price makes a lower high, it needs to make a lower low and then make another high. If price does this, then that there is not a break of structure. Okay? Because price never made a new low. Okay, so if price is actually coming here and respecting the high and respecting the last low, whatever's going on in here is considered consolidation. It doesn't have to look like, these equal lows and equal highs and things like that. But what it does need to look like is what's going on at the high, what's going on at the low. Until we break lower, we can then identify a new low and a new high. So this weekly area is the high. This here is the low. So essentially, we're in an area of consolidation right now, and it absolutely could technically, push to the upside. And we have got this kind of short-term break in here and things like that. But again, we're not using this weekly area for price to react in, or for price to actually take us in on. So, we need to be looking at the smaller time frames, as in the daily, and I'm saying daily as a smaller time frame, just to kind of have a look at where we are. Now, on the daily time frame, we can identify that price did make a high, then made a new low, and then it made a short-term high, short-term low, broke, come in, obviously made another high, broke, come in, respected this low just about, price made a high above that high there. We then, created a bit of consolidation, price then came lower, pushing higher, pushed up to the upside here. And as you can see, that was an area of choppy price action coming out of the back of December and January time. And you can see since that's happened, we've expanded to the upside. We've come down into an area of nothing. We've then pressed higher by respecting this imbalance and entry model here. Price came in, pushed higher, came back down, respected this area here. So when you're looking at market direction, it's very important to follow the daily. So I kind of want you to take it on as, daily equals, where's my spelling? Equals direction. Okay, so just think from now on, think of the daily as direction. The reason this is because, the weekly is technically bearish, for example. But looking at where we are, nothing is going to happen for price to come down here very, very quickly. So looking at where price is currently in drawdown at the moment, we can identify this daily area here. So looking at the way price has been walking its way up, this is an institutional candle on the daily area. This is the last down candle before price moves to the upside. So what we can actually identify is this as a trading range. So I can measure the trading range. I can, use my fib levels to identify my kill zone. I can highlight certain areas and things like that. So I'm just going to use that for my kill zone, and I'm going to highlight that there. And I'm going to get another line out. I'm going to use this as my 50% area. So I can get rid of my fibs now. I've identified where we are on the trading range, and I can see the 50% lies within this imbalance. So all I'm doing now is I'm piecing areas where price could react from to go higher. And this is the beautiful thing about trading, because if price completely disrespects this area here, I'm not going to take a trade. And one might ask, well, what if you just took it at this daily level? Because at the moment that's valid and it could stop me out. But this is where, when I was talking about in the previous session, or the previous market structure session to be precise, is that, when you're looking for price to walk its way up, on a smaller time frame, you would anticipate price coming into this area, breaking structure, and then actually starting to push higher. So that would represent another color. Now, if price is going to, disrespect that level there, so if price is going to push higher and then actually disrespect this level here, as it could do on this daily level here, what would you actually see on a smaller time frame? Well, what you would see is price walking its way down and not giving us evidence to actually get in. So we can actually see price now coming lower, not giving us the evidence to get back in. And if we don't see it, we don't take the trade. It is as simple as that. So, I can identify on the daily area, we have got this daily institutional candle, we've got this kill zone, we've got this 50% area. Within the 50% area, we've also got this area of imbalance. So ideally, I'd like to see price come lower before I start looking for long-term buys. However, it's just about understanding where you are on the timeframes. Now, I could very easily now start shopping on the smaller time frames and things like that. Now, if I look at what the smaller time frame is doing, I can still see the 4 hour is actually bullish. And the reason I'm saying it's bullish is because that's a high. And the last low was actually down here. So until price actually breaks this 4-hour structure here, we are essentially bullish. And what's going on here is price is retracing. Now, you can get in on the retracement, but you have to be fully aware that the 4-hour is bullish and actually pushing higher. So when you actually get in, let's say you get in on a little bit of break of structure on a smaller time frame, your target has to be this kill zone, because price could very easily come into this 4-hour candle here and actually start accumulating. And if it does that, we are now within structure of the daily time frame. So it's vitally important that when you consider your directional bias, you understand where you are on each time frame. And we've worked our way all the way up. We know where we are on the weekly. We're in an area where this is the target, the internal liquidity. We could do with price coming up to this area here as well. That institutional candle, which is technically an FU candle as well. So nice areas there to be seen. So you've got this high, as in the weekly candle. You've got this internal liquidity, which has actually created us perfect equal lows, equal highs now as well. The daily is walking its way up very slowly, and price is at a high. This is 50% of the entire trading range. This is your kill zone of the trading range within the daily candle, which respected this level here, of which this level here dipped into this imbalance, respecting this order block here. And it's now pushed out of that horrible consolidation zone. Now, there's areas down here which you would want to use as areas as a red flag for your trades. Now, this is liquidity down here. However, I don't care about the liquidity all the way at the bottom. We're up here at the moment. And we can look to the left and identify what's going on, as in there is a candle there, we've reacted in, we have respected it, so we can anticipate distribution. But on a 4-hour time frame, if we get distribution, we're going to have to close under here. So actually we're still bullish. So if we actually come into this area here and do accumulate, you're going by daily structure and you're pushing price higher. Now we can use this candle over here, this daily candle here, as a potential area, because it is an area in drawdown, and there is another candle here and another candle here and things like that, but this is an area that's in drawdown and we could get ourselves a short-term entry. So the 4-hour hasn't given us anything yet. Okay, the 4-hour hasn't given us anything yet, but the 1 hour, we've got ourselves distribution up there in the most perfect form. The only issue is it would have stopped you out because the wick that pushed above. That was last week with very high volatile news and things like that. But essentially, we did get distribution, because if you look at the line chart, you can see the distribution quite perfectly. So now you are actually bearish on the 1 hour, because this is a high, this is a low, lower high, lower low. All of this here, a little bit of a break. We've got the last high coming in, made a new low, and then it's kind of consolidated in this area here for the last, couple of hours, as it were. So there's nothing here at the moment which is actually that interesting. But if we continue to get sell opportunities, where would you actually target? Well, my first target would probably be this 50% marker on the daily, because on the daily time frame, that is where I want price to go to. So if you get a sell opportunity within this 1 hour area here somewhere, and this area doesn't exist at the moment, so I'm being hypothetical, but you can target this area here now. You can target this area here, you can target this kill zone, because you are bullish overall, but we can go short-term bearish, and you just have to understand where you are. So if we go even lower now, you can actually see this has just been consolidating. This is ugly. We don't really want to get involved with this issue here. Price, this is your 1 hour distribution. Price aggressively came in, came back in, stopped you out, pushed down again, came back to this area here, respected it in terms of candle closures, gave us distribution here, high, lower, low, distribution right there. Price has now been dropping lower. We've come into an area of consolidation. We've actually broken higher on the 1 hour, on the 15-minute here. So we could, this could be manipulation to take this liquidity out here, or we could be looking to come lower from here. We don't know yet. But either way, this now is a waiting game. It's a complete waiting game. And we have to identify what's going on. Yes, we can see liquidity in this form here. Yes, we've got the 50% level. So my bias is still for price to come lower. However, when you identify that these just aren't the trading conditions, the best thing to do is to be extremely patient. and not do anything and just wait. The reason I'm asking you to wait is because there's nothing clear and obvious to get into here. So in determining direction, you want to go in line with the daily, ideally. So maybe you set an alarm at this daily area here. That is high probable. And we're doing a lesson on high probability setups in a couple of lessons. So, just keep an eye out for that one when it's out, because, any trade that goes in here in the retracement is not as highly probable as a trade that reacts within your daily area. Now, it can class as probable by the fact that we have got this daily candle here. The price has been walking its way higher, so we've kind of got two areas of interest here. You could easily get a sell, highly probable, within that daily candle which sits here. So if we do get sell opportunities that arise, then perfect, but your target has to be this 50% area, because price can very easily come in and then press higher. If it goes even further, it would come into this area here, and then price should, by structure, push higher. Now, if you get a sell in here, it's important that you come out when you hit your targets, because what's going to happen is if price does break below this daily level here and causes a break of structure, you're going to have a new trading range to work with. So if price actually closes here and you think to yourself, oh, but I got in the sell up here, at this daily level sitting right here, and it's sold off, and I actually got out here because that's what my rules told me to do, even though that's giving me a 5-1 or a 3-1, whatever. But you're gutted because price has dropped lower. Well, what can you anticipate now that price has dropped lower? Yes, you've missed out on some extra profits. However, you've got out in profit here as a guarantee, or you've got out in profit here as a guarantee. Price has actually caused a shift in the downside movement from that daily area, which is here. You then can identify a new trading range. So let's just say this is, the candles that move down and things like that. You've got your new high and your new low. So if you identify that there is your low and then your high, well, on a smaller time frame, bear in mind you're in the daily here, what can you anticipate? You can anticipate price to start accumulating, to move higher, because you're going to have to start reacting at where? Price should really come to the 50% level again. So you would want price to kind of do something like that. So if you took a sell up here, lower than this low here, and still held it, you're potentially going to lose more profits than if you actually got out in here, because price is going to accumulate. That is what happens. And actually, if you get out in profit here or in here, and you anticipate prices closed below this low here, and now within this area right here, I'm going to anticipate my... I didn't catch that. Oh, my watch is talking. Sorry about that. I'm going to anticipate my, accumulation. Well, now what have we got? Now we've got opportunities to buy. Even though we've broke below that low, but we've given ourselves opportunities to buy. Now that's not as high probable. The most probable thing to do in this situation would be to wait for a reaction in here, because we want to distribute at the 50% level. And obviously I'm talking about things that haven't happened yet, because looking at where we are now, this is the range right here. So price is now bullish on the daily. And you can identify areas to sell into these areas. But until price comes into this daily, that's the probable setup, waiting for price to come in. Which is why I said, daily equals direction. Focus on what is happening on the daily time frame. Okay, focus on what is happening on the daily time frame. But obviously you can take sells, but this is just a lot of sauce. This is messy. The daily doesn't look messy. If you get a clear opportunity for accumulation inside of here, that's your opportunity to take it. So if we shop down the time frames now, we actually have a look, we can refine it. That 4-hour candle there, even though it's very small, sits within this kill zone. The 3-hour, again, we've got another candle here, which sits within the kill zone. The 2-hour, the candle there, the 1-hour. So, this kind of order block here would be what you'd be kind of looking at. Nice, healthy imbalance, which comes even deeper than the 50%. So, sales are absolutely on from these areas, but it's got to come out of this range. If I was to anticipate what I would do if I was an institutional banker or trader, I'd probably take price higher to sweep this liquidity, and then start distributing to come lower to take that liquidity there. So I'm taking all out both ends of the marketplace. And you can really play with things, because we could take some buys in here just by going on smaller time frame structure. You look at what 15-minute structure has done. We can really work both ends here. We can take that high, we can take these lows. But ideally, price will accumulate somewhere, reaccumulate somewhere, and things like that. But you have to identify, what is messy and what isn't messy, and this is messy. So, this really does kind of not conclude the directional bias, because we've got a lot of work to do with it. But, this is giving you examples and things like that. But essentially, you're looking for areas on the daily time frame. We want price to react on the daily time frame. I mean, if we do look at another chart, let's look at gold. So lovely reaction out of the area we called out earlier, by the way. But yeah, so again, looking at where we are on the daily now. Now, this is interesting because where we are on the daily, compared to the monthly, we're in an area, we've come into this monthly candle. Now, I've been bullish for a long time in the sense that I've wanted price to actually come for this liquidity here. Now, we don't have to come for that liquidity there. We could very well react from this monthly candle here. Now, we've got this monthly area, and this is me now looking to the left. Price dropped aggressively, has now come back up. Well, we've actually got ourselves a short-term reaction. Now, I'm going to identify this liquidity which sits right here. And that is always going to be there for me. I'm looking for that liquidity to get taken out. But I have to respect what structure's doing. Structure trumps all. Okay, structure trumps all. Now, we've come into this candle, which, looking at it from the weekly, it's all looking very, very pretty at the moment. And I can highlight that as my weekly area there. I'm going to get rid of this monthly candle because we're refining our entry point. So price, has taken out all of this internal liquidity, which rests above here. Price has come up, and now we've suddenly got ourselves a rejection. Now, if we look at the daily time frame, we can see the rejection is actually giving us an idea of what the structure is. So looking now at structure, and again, if we get the line chart, you can see a very, very clear break of structure. Now, I need to look to the left here and see that we've obviously taken that liquidity in the process. So that's a liquidity grab right there. But also, let's look at what's going on here. Now, we've obviously taken out a lot of this, like this low. We've taken out this low. But what's here now? We've got a candle in drawdown. So actually, if you're selling gold, where could your targets be? Well, you've got this low, you've got this low, you've got this candle. But what's going to happen if we get to this candle? This weekly area could be reacting at this candle, which is sitting within this weekly imbalance. So there's every opportunity that candle there is going to influence price to go higher and indeed attack this liquidity. But you could easily get sells in here, but you have to understand that to take the sells, you have to get to your targets. So if price actually comes into this imbalance and then gives us a break to the upside on the 4 hour, so if we do something like this and then accumulate, it's going to have happened within an area to your left where price could easily do that. And however long-term or short-term you think things are, if you're a swing trader, you're taking entries off this daily area here. And you're accepting that you're going to be in the markets for a long time. But we're not swing traders. We're intraday traders. We're getting in and out of the markets relatively quickly. Whether that's a couple of minutes, whether that's a couple of hours, whether that's a couple of days. So, it's really quite amazing when you see what structure's doing. And, I was following this price action down because target-wise, we could easily come to this line here, which represents your daily candle. So, looking at what price has been doing, we can see, yesterday was looking at the 15-minute. We had our point of interest, which was actually called out the other day. We reacted, and then we left this 15-minute area here, which if you refine it on a 30-minute, you can see we've actually come in very perfectly. The price is walking its way down now, potentially coming into that imbalance to even come lower. And what's the target? Well, your first target has got to be these lows. If you end up coming out of here in profit at 1 to 3, you need a couple of them every month, every week, fine. Don't always go for the long-term targets. They will happen. They will, you can hold price, but the chances of you holding price from here all the way up to here on a 1 minute entry isn't always likely, because you get retracements and things like that, and you want to just come out in profit. So it really depends on the situation, on how emotional or emotionless you are in the marketplace. But essentially, looking at what price is doing here on this 1 hour now, you can look to take price lower and things like that, but understand where you are with overall structure. 4 hour, bearish, coming into an area of imbalance, consolidating in here now. So we need to kind of make another low before we start really identifying price and things like that. The 1 hour, bearish, low, high, low, lower high, and nothing. Still bearish. Consolidating now. 15 minute, we've got, we've identified really nice opportunities and areas and things like that within the 15 minute. But I'm very aware of where I am on the 15 minute. And that's the difference, guys. I'm very aware of where I am on the 15 minute, because overall, the daily area is due a retracement at some point. Even if this daily candle here gives us a reaction to go higher, and even if it just fills in this imbalance which has now been created, that could get you very short-term buy opportunities. And then why would it be probable? Because there's a candle. So, I guess the moral of today, guys, is get yourself into the habit of always looking left. Because, for perfect structure to happen, what we want to see is price move higher from this area here. Now, whether or not it reacts here, because if it disrespects the area, it'll be because you're in a weekly area of imbalance, which is sitting here. But we're not interested in price coming this high. We're interested in maybe taking price to that imbalance to come lower. But if price comes to this imbalance from this area here, you identify accumulation in here, you're supported by the higher time frame daily area. And if price does come up to here and then distribute, what are you supported by? You're supported by the daily FU candle. Anywhere you find daily candles, imbalances, have a look at what's happening on a smaller time frame. Look at what we did here. Price pushed higher. Price came into this area here and then pushed higher. There was definitely, buying opportunities happening within there. In fact, let's have a look. Let's just see. Price came into this area of imbalance. Even on the 4 hour, we can see we came into this imbalance. We broke above these areas here. We respected this candle right here. Pinpoint perfect entry before you've even gone onto a smaller time frame. I mean, look at that. It doesn't get much better than that. Really, really amazing price action right in there. And what you could have done, this here is your 4 hour area, or your 4 hour candle, which we're identifying as a potential for price to react from within. We can go even lower, maybe onto a 15 minute area here. We can see price, coming lower, reacting, pushing higher, entry of the imbalance within this order block here. Let's see if we found an even smaller, more precise entry just by shopping down. Nothing really on the 5 minute, 2 minute. No, not really anything that would have been that interesting. But this is the thing, you're not going to play in these areas. You could easily have got, some sort of play in here somewhere, but you would have been out at this high here. Because you don't need to be scouring. You don't need to be taking price any higher and things like that. So, hopefully, guys, you've got a much better understanding of directional bias now. But overall, what we need to be very aware of is just where we are on the high time frames. Okay, so, every single day, I'm always looking at the daily areas. So like as of now on US 30, for example, you can identify what's happening on the daily area here. We're obviously pushing lower. Now let's look at the reason we could potentially be pushing lower on the daily. We've now got this low here. We've got this high here. Let's look at what the 4 hours actually doing. So maybe we're going to come in, flirt with the low on the daily and actually push higher. Or 4 hour is actually breaking structure. You can see, well, not breaking structure, continuing structure, because what we can kind of see here is price is, closed lower than this area here. It's now within a lower high. Maybe we're going to push lower. By doing that, we would end up, taking out the previous day's low. So, looking at the 1 hour, again, with broken structure, we came into this candle, we reacted to the downside. Let's see what happened when we got into there. Price distributed after taking out that liquidity. So you can see here, double that. So we can see here, price swept above that high there. Price came back into that candle there. You can see it, guys. Right there. Let's see what happened. Smaller time frame. Let's just see if we got another opportunity. 2-minute area here. You could have got in this accumulation or distribution. I mean, a bit messy on the 1 minute, but 15-minute, it looks really good. And price is obviously dropping lower. So just look at the, look to the left. Look at areas where we could potentially react from. And we can see prices making its way down here. Now, in terms of entries and things like that, we are going to dive very, very deeply into all of that. I'm going to show you how to, get into entries, halfway down the range, because we know now, looking at US 30, that realistically we are targeting this low here because the 4 hour is bearish, correct? Now, while price is dropping, we're going to have a look at areas to get into, and I'm going to do future lessons on, what to do and things like that. So, using these areas here to look for liquidity draws and things like that, and there's going to be lessons. So after this lesson, it's about how to identify buying opportunities and selling opportunities, and then we're going to do high probability buys, high probability sells, and things like that. So yeah, guys, that wraps up today's lesson. Thank you very much for tuning in. We are going to dive deeper into this stuff as we coordinate and correlate this section of material and things like that with entries. Okay, but as mentioned, it's just vitally important to understand where you are on the daily area, where you are on the weekly structure, monthly structure, and overall structure as well. And with that, guys, I'll see you on the next lesson.